Welcome to the next episode of Fridays with Fintelekt. Today, my guest is Sujata Dasgupta, Global Head of Financial Crime Compliance Advisory at Tata Consultancy Services, currently based in Sweden. Sujata is an international award winning industry leader with proven excellence in domain advisory, management, and IT consulting in KYC, AML sanctions, and fraud. She has over 2 decades of global experience across major financial hubs, namely New York, London, Singapore, Frankfurt, Hong Kong, and now the Nordic region, leading financial anti crime programs for premier international banks. Sujata, thank you so much for joining us today.
The pleasure is mine too, Shirish. Thank you so much for having me here.
So, Sujata, at the outset, can you give us a very quick overview of your professional career so far?
Sure. So I started my career. I mean, I was born and raised in India, and I started my career in India as well. I joined State Bank of India as a probationary officer. As you know, we give the All India exam, and that's how I started my career in India. It was Kolkata head office that I first joined, and after a couple of years in Kolkata, I was posted in New York. And that was, I think, a turning point in my whole compliance career. If we talk about the compliance thing, so that was 6.5 years in State Bank of India, covering India and New York. And then I moved to IT services initially with IBM, then with Infosys. And now I'm leading the consulting and advisory for financial anti-crimes for TCS. So I've been with TCS for the last 5 years now. So that's in brief about
Right.
the journey.
Right, excellent. So, Sujata, coming straight to the point, what are some of the technology trends that you foresee over the next couple of years for AML safety compliance? And in this process, how do you see the role of people in the AML compliance function at banks and other reporting entities evolving?
Okay, so I'll break this into two parts. The first is about the technology trends. So the first thing that we see is AML compliance as such. It was never seen as a separate function in the banks initially. So when I started my career with the bank, I did not know that compliance, AML, KYC was a separate function, because as we know, it was all embedded in the banking processes. So when we were opening an account, we did all the due diligence, and it was all one simple module of the bank, which was called an account opening, right? But then over the years, we have seen a huge transformation in the way this whole compliance has evolved. So it has become a huge, a big function in itself. And you now have in every bank, you have a CCO. Why just banks? In every company, you have a CCO, because compliance has become that much important. And we know it's not a revenue generating center. So it's more of an administrative or regulatory compliance business. So though it is not a revenue generating business, we are seeing a lot of technology spend going into this risk and compliance business. The reason being that the scale, the sophistication, the volume of financial crimes has increased so much that whatever the technology transformation that we have seen in the last, I would say, 5 to 8 years, has been much more than what we have seen in the previous, say, 30 years or so. So because of these changes in this whole the sophistication of crime, because as technology is advancing, the criminals are making use of these advanced technology to make their crimes more sophisticated. So there is no other way for banks than to tackle that with sophisticated technology as well. And as I was saying, we are seeing a lot of changes in adoption of advanced technology in the last couple of years. I foresee that there will be a lot more adoption in terms of using a large amount of data, using advanced technologies like your AI, machine learning. There is happening a lot of automation is still happening. And the other thing I think is collaboration, whether it's interbank collaboration or collaboration with the regulators and law enforcement as well, which we are calling PPP, the public private partnership. So if I have to sum it up as top 3 trends, I would call it data and AI or advanced technology would be one, because the whole compliance function will absolutely be driven by data and powered by AI. That is my first thought. The second would be bringing in more of automation, because with this huge volume and scale, it is not possible to manually do everything. So I think there is a huge amount of automation which is also coming into this whole business of financial crimes. And third is the collaboration in terms of sharing data, sharing models, building your analytics together on the cloud, plus your collaboration with the law enforcement and regulators. I think these would be, to my mind, the top 3 trends. Now, your second part of the question was, how does that impact the workforce? So like I was mentioning, till now, it was a lot of human effort, whether you take it as a KYC processing or the investigation. It was all very, very manual, but it is not going to stay this way. So we have to get things automated, and there will be intelligence built into the systems and so on. So I think the workforce, the amount of manual labor that is happening now, will have to go away, because it's simply not possible to sustain that. But this is again my firm belief that it does not mean that there will be a reduction in workforce. Rather, I like to think that there will be a realignment of workforce, because the machines are only good as how humans build them. There will still be people required for tuning those models, revising those algorithms, like what we saw during the COVID-19. Machines were not able to tackle because machines did not know of such a situation. So there were humans who had to build in new typologies, new algorithms. So that part of human element is still required in maintaining the models. And the second part is the judgment still has to be human judgment. So people still, our analysts, they have to move away from doing this manual data collation. Rather, they should try to build new skills around analyzing data. How do they visualize? How do they see something? So when there is data in front of them, how do they make the judgment based on your networks, your graphs, your visualization? I think that is the skill which the workforce should need to learn. So there will be a realignment of labor. So there will still be people, but the skill sets would have to evolve. They need to upskill themselves, is what I think.
Right. So, Sujata, how has the emergence of fintech and regtech impacted large IT services or large product technology companies? Has it created competition, or do you believe that they play separate or complementary roles in the entire AML safety provider ecosystem?
Okay, so again, I'll take this in two bits. One is you mentioned about the fintechs and vis-a-vis your IT service providers and product companies. So you mentioned two different things. I think I come from an IT service company myself. I work for Tata Consultancy. Now, the generically the market has been divided in terms of the product vendors and IT service providers. So they had their own different niche. So product vendors were, developing and building their own products, and IT service companies were doing the professional services around it. So there, I think there is a clear differentiation there. Now, with the coming in of, these new fintech companies, and I think, we can talk more about the digital players, because it's a world of, business 4.0 now. So everything has to be in the digital context. So that has, impacted both of these, I would say. The new fintech players have definitely impacted your leading market product vendors as well as your IT service providers. Now, to me, I think this has brought in a very healthy competition, because the new product players, as we see, they are focused. They are, if we just talk about the FinCrime area, there are very focused players which use digital and AI and robotics to improve the effectiveness and the efficiency of your financial crimes prevention, detection, and so on. And they are very, very niche. They're structured in such a way that they're very nimble. They do a lot of research and development. They're very nimble. They're able to adapt very quickly, but they do not have a large workforce as your larger companies have. So they are definitely a competition to the existing product players, but I think it's a very healthy competition, and they have they have brought in this culture of innovation and incubation of new ideas, new digital solutions, and incubation, a lot of research and development in this area. So I think that has been brought in because of this surge in new fintech companies, which may be smaller in size, but they have made a huge impact. So that way, I think it's a competition, but a very healthy competition. And if we look at the IT service vendors, well, IT service vendors were anyway not working on products, but whichever service company that you look at now, they are strongly collaborating with these fintech partners as well, because like I said, they're all driving the business 4.0 agenda. So rather than building something of your own, and these large companies, they don't move as quickly as these smaller companies. So for them to build a product of that much of a niche and sophistication, rather than do that, they are partnering with these companies. So you will see most of these IT service companies are partnering with a large number of these digital fintech players. So again, I see a lot of collaboration on this aspect. And why this is working, I mean, there are a lot of success stories that this is working, is because the professional service companies, they have the reach, they have their clientele, and they have the scale. So wherever it's implementation. Now, these new fintech companies, their products are not, they are API based, cloud based. So implementation of that piece is not so much of a, not too much of an effort. But if you look at banks, a bank does not just implement that particular box. There is a whole ecosystem around it. So there is system integration, there is data, there is testing. So the professional service companies, the IT companies, are coming in to do that whole, the surrounding services. So I think there is that collaboration also working well.
Right. Very interesting. So, Sujata, let's speak a bit about penalties, right? So, regulators all over the world, whether it's FinCEN or MAS or the 6AMLD, everybody is bringing in much higher penalties for non-compliance. But do you think they are really working, or are banks just viewing them as a cost of doing business? And is it really likely to bring in more effectiveness to their work?
Well, this is a slightly sensitive subject, but I'll try to answer. Again, this is what I believe. Yeah, we do read about a lot of penalties, and this has, I think, accelerated in the past few years. We didn't hear of so much penalties, say 20 years ago. That is because of the enormity of the crime itself, and it is the impact that it has is huge. The impact on human lives, the impact on wildlife, the environment as such, and the economy overall. As we keep reading about this number, $2 trillion every year is an estimated amount just through money laundering, and we do not know the overall impact. So I think these are very significant impacts that it has on human lives, on environment, and the economy as such. So it should be looked at in that broader perspective, and probably for large banks, the penalty is maybe is smaller than making that whole transformation. Probably, I'm not sure. So if somebody is paying a $700 million, I mean, that is on the higher side. If somebody is paying a $700 million of a penalty, maybe that is a smaller number compared to the technology spend they have to do, if they have to probably change the technology in 100 countries. So maybe that is not a proper driver for them to do it. I think the awareness has to come that it's not just about penalties. It has to be looked at the overall broader perspectives. So maybe that in some of the cases, maybe this penalty is of a smaller size, and it is being reserved as a cost of doing business, possibly because, as we said, this is not a revenue generating function. It is more of an administrative compliance function. So possibly for some of the banks, this may look like a smaller number, but I think that awareness is growing, and we are hearing that a lot of transformation is happening, because even during the COVID times, when IT budgets were cut across the board for all kinds of companies, we saw that the compliance spends did not decrease actually. So they were either stable or they had increased because of COVID-induced frauds and scams and cyber crimes and all that was happening. So we did see either a stable or upward trend of IT spend in this compliance function, where everything else was being cut down. So I think that importance is being awarded, if not earlier, at least now it's happening.
Right. So, Sujata, while we are on the subject of penalties, we see that it is often the larger or multinational banks that are penalized, or at least they make the headlines more often. Now, in this part of the world, we find that there is often much lower awareness and maybe some lack of importance given to AML compliance at some of these smaller or regional financial institutions, cooperative banks, the DNFPB sector. Now, is this pretty much the same around the world? What have been your experiences around this?
I think there has been a regional variation in terms of how regulations have evolved, firstly, and how technology has been getting adopted. So again, in terms of regional variation, we see that UK, Europe have been among the front runners, where both regulations and technology innovations, they have been much, at a much faster pace, and they have been the trailblazers of sorts. So after that, if I look at UK, EMEA, they have been at the top, and then probably it's the Americas, and then comes Asia, and Africa comes a little later. So these numbers, these are not my own. Again, these are from the various reports that we see. The analysts have been publishing a lot of reports lately in the area of regulatory compliance as well. So there has been this regional variation, and of course, probably it is related to the financial inclusion, or exclusion, if we might call it, because large parts of these developed countries are not financially included. So that also probably is one of the reasons. Like you said, there is a lack of awareness. So probably that is also one of the reasons that people are not aware of these regulations, or they do not even have a bank. Say, for large parts of Africa are unbanked. So that is one of the reasons. But then, because they are trying to use alternate financial systems, so that is one deterrent that it needs to be stopped. So that awareness is also coming in. As you see, FATF has been reviewing the AML procedures across all countries. So that is happening. FATF has been going to every country and reviewing them. And whichever country is not, up to the mark, they are being put on the gray list and being monitored regularly. So I think all these things are, happening as of now. Even if you see that FATF's gray list, you will see some of the countries which may not be, among the very developed ones. So that regional variation is definitely there. But having said that, we have seen that some of the regulators in Asia, for example, if you see MAS, that's Monetary Authority of Singapore, or Hong Kong Monetary Authority, or AUSTRAC in Australia, these regulators have been very focused and very aggressive in terms of driving this agenda. So we get a lot of reports, we see a lot of collaboration of these regulators with their banks in that region. And I think that perspective has been changing now. So while Asia was being viewed as a laggard, again, I'm talking about the reports that were viewing these as, slightly lagging behind in terms of regulatory and technology adoption. I think that view is changing now. And that is the reason that we hear about AUSTRAC and MAS and HKMA in a lot of different forums, the ones which I attend or I'm just listening in. So that view is actually changing. So I would say that maybe there was some lack lack of awareness earlier, but then fines and penalties are not restricted to large banks alone. Maybe they make the headlines because people know about them, but the rules are same for everybody in one jurisdiction. So it applies to large or small. The rules are the same.
Right. Thanks, Sujata. So, to sum up, maybe may I ask, does, in your experience and role in, these large IT services firms who work as partners to banks, where do you think are the lacunae in the banking or financial system? What would you say are, let's say, the top three areas that need to be improved to make it easier to detect and report transactions, and, in turn, report the suspected criminals who are abusing the financial system?
Sure. So if we see, like we were talking about the large banks, so the penalties about large banks are more talked about. So we know about their systems and their processes because so much is written about them in the media. So I think with the large banks, what happens is they're spread across multiple countries, and the way they have grown has been organic, inorganic. They would have acquired some bank, and they would have opened a new branch, opened office in a new country. So there has been all kinds of growth, and most of them have been 150 to 200 years old. So you can see the evolution. So what has happened in the process is that their whole landscape, if we talk about the process landscape or the system landscape, has become very fragmented. So in every country where you have acquired a bank, you have acquired the legacy systems also. You have acquired those processes also, right? So those have remained very local, and it has become disparate. So if you look at a large bank which has operations in 50 countries, you will see 50 different different processes and rules working across, and in each country you will see again 10 or 15 different systems just for doing KYC or an AML. So I think that is the major gap that we see, or the problem area that we see, the systems and data is fragmented. Now that is criminal. You cannot have a bank with so much of disparate systems and data, because the whole concept of tracking criminals is about aggregating their behavior. So unless you have the full view, the 360-degree view of every single customer and their whole networks also, it is impossible to track criminals. So that, I think, is the first major problem. The second is about having frameworks which are not uniform. If you are a bank and you have a framework which is different in every different country, I think that will not work, because then it means that it's not acting as a bank overall. So the criminals will try to use that country or that that jurisdiction where the regulations or where your systems and processes are leaner, and that's what has been happening, right? So we hear of large banks which are doing massive amount of transformations and digitization, but still we hear that bank being penalized in some country. Why is that? Probably the criminal has used that loophole in that country, because it's still not standardized to that extent. So I think build global and execute local is what should be the framework in terms of processes. And the third, I would say, people. So I always try to talk about these three things. First, I said, platform, process, and then it would be people. So in terms of people, I think in a lot of cases, we see that the people, our analysts or our frontline staff, are so busy just doing their work that they're not aware of what is changing, what regulations have changed, probably new systems have changed. They may not even know when the bank has changed from system X to system Y. They may not even know how to use that system or how to use a certain feature of that. So I think skilling and training and continuously maintaining your skill set of the people are extremely important. So those were the three: people, process, and platforms.
Right. Thank you so much, Sujata, for all that information and for sharing your thoughts. It was fantastic speaking with you, and pleasure having this conversation.
It was my pleasure too. Thank you so much for having me once again.